Hello everyone, welcome back to Nandhuz Equity, a channel for wealth creation ideas. We all know India is having the largest railway network in the world. But we always think about only a few companies within the railway sector. Many of us think that IRCTC is the only company within railways. But there are about 10 companies and even other PSU companies that contribute to Indian railway network. So today we are going to see 10 railway companies. Within that, we are going to analyze which is best, which is cheaper, and which has future potential for investing. Before we go into specific companies in the railway sector, we need to understand why Indian Railways is so significant and why people love railway stocks. So Indian Railways is the fourth largest railway road network in the world for both passengers and freight carrier. It's having more than 1.4 million employees, which is the highest in the world. We also need to understand that Indian railway industry is the major contributor to the nation's economy. Furthermore, Union Budget announced a record allocation of funds for the railways in the year 2023. And never to miss, budget allocation has been in the uptrend year on year for Indian Railways. Indian Railways has been manufacturing one train every 7 days currently, which has a plan to increase it to 2 to 3 trains per week, which is clearly depicting the demand. And there are hundreds of large projects funded for last and first mile connectivity for various things like coal, minerals, food grains, gas, whatnot. This is going to be a little longer video as we are going to have both fundamental and technical analysis of about 10 companies. So please watch without skipping, and also please subscribe and support me. So the first company that we are going to see is IRFC, Indian Railway Finance Corporation, which is again owned by government and as a financial institution that provides all financial services to the Indian Railway. So it was set up with the sole purpose of borrowing funds to minimize the borrowing cost and delays, and focusing on leasing, lending and borrowing operations for Indian Railways. And this company has successfully raised more than 1 lakh crores and achieved its highest ever target of raising funds for the Indian Railways. IRFC is the top player in terms of market capital in the railways industry. It has more than 60,000 crores of market capital and its current price is 47, which has a very good stock PE at 9.9 versus the industry PE of 7.45. And its returns, both capital and equity, is average, and dividend yield is also average, which is having about the highest at 52 and lowest at 20. This has a good intrinsic value, and also its EPS is average. This has delivered profit growth of 25.3% CAGR over last 5 years and maintaining a healthy dividend payout of 30.7%. This has no NPA, non-performing assets, and which is part of the Fortune 500 India companies at 96th rank, and which has financed more than 2.5 lakhs of freight wagons and 73 plus thousand of passenger coaches. So this has solid fundamentals and also one of the biggest in the railway sector. The stock is above 50 and 200 day moving average, and it has been in an uptrend for a longer time, and it is really good in terms of both fundamental and technical perspective. I think I don't have to talk much about IRCTC, and this has been a favorite company from the railway industry for many retail investors. So it does ticket booking and various other services for millions of people in India, and it also has strong catering services at stations. It does tourism department services. It also provides RailTel, is water, and also travel insurance. And this is the second biggest in the railway sector after IRFC. IRCTC is the most expensive stock within the railway sector and has high PE and also trading at 3.45 times of its book value. I feel the dip in returns, sales, all could be because of the COVID-19 reason, because we had lockdown and also there was a dip in Indian tourism. Now it should be picking up, and from a futuristic perspective, when it turns out to be positive, this could be a good potential stock. However, this current year, despite the increase in tourism and other railway transportation usage, the net profit has declined 5% in first quarter to 232 crore versus 245 crore in the last year. From a technical point of view, it is picking up, and of course the stock is above 50 and 200-day moving average, and I would say it's average from a technical perspective, and we need to really wait and see for a volume breakout. Container Corp or Concur is an important company within the railway network. Indian Railways handed over a network of 7 inland container depots to Container Corp. Container Corp is having 75% of its market share and has pricing power and highly supported by the Indian government across railway network. This may get privatized either in 2023 or 24, and it may turn out to be the best railway stock to invest in the near future. Adani Group conveyed last year that it is creating a war chest to acquire Concur. It may own a 30.8% stake the government plans to offload in the near future. From a fundamental point of view, I feel this has very strong growth opportunities when it gets privatized and has a huge market share of 75% and has pan-India operations, pricing power, well-established network, and debt-free, healthy dividend payout of 53%. However, the current price is quite high from a stock PE perspective, and of course the returns have been quite average, but this can be a big turnaround by the time it gets privatized, and by then this stock may not be even available. So this could be a good opportunity to keep this in watch list. Again, from a technical point of view, almost all railway stocks are above 50 and 200-day moving average, and in this chart we can see kind of a triangle pattern, but however we need to wait for a good volume breakout. The fourth stock in the list from market capitalization is Rail Vikas Nigam Limited, RVNL, and it focuses on railway projects. It's responsible for implementing various infrastructure enhancement, track doubling, electrification, bridge construction, and basically to improve capacity and efficiency of the network. It handles entire project from development lifecycle point of view from end to end. RVNL has fantastic fundamentals, and its market capital is quite mid-sized and current price is at 123 and having a stock PE of 17.5 versus industry PE of 30, which is really good, and has a decent dividend yield and also good return on capital and return on equity. So the recent Q1 results, net profit jumps 15% to 343 crore, and also the revenue has gone up 20%. Again, from a technical point of view, if you look at the chart, we can see some smaller triangle patterns. It already had a big breakout in the past, but now we need to wait for next breakout with strong volume. The next in the pack is RITES Limited, multidisciplinary consultancy and engineering company, and it provides various services related to railways, project management, engineering, technical services, and also it takes care of infrastructure development projects. I think this is the topmost dividend yield company from the 10 companies that we are seeing, and has a healthy dividend payout at 80.8% and has a strong fundamentals, and also at the stock P of 21.2 versus industry P almost the same, and book value is good. Current price is at 453 and has a headroom to go up. The technicals are average again. It's definitely above 50 and 200 day moving average, and we do not see major breakout and patterns currently. Only in the past it had some triangle pattern and breakout. The sixth stock is Ircon International Limited. It's more about engineering and construction in the railway space, and it takes care of construction of railway tracks, bridges, tunnels and other railway related infrastructure, and this is also taking care of projects outside India. From fundamental perspective, Ircon has a strong fundamental. Its stock P is only at 11.7 versus industry P of 26.4 and has given decent returns in terms of ROC and ROE about 15 plus percentage, and current price is at 100 and it has good intrinsic value, and this could be a decent mid-cap company from the railway pack. Apart from fundamentals, technicals is also strong, which is in a long-term uptrend and above 50 and 200 day moving. Titagarh Wagons is one of the favorite stocks for DII and FII and even retail investors, because it produces manufactures railway wagons, coaches and other rolling stock for both domestic and international market, and specializes in design, production and maintenance of freight wagons, passenger coaches and metro coaches. Titagarh Wagons is a mid-size company, mid-cap company, which has the largest wagon manufacturing capacity, about 8,000 plus wagons per annum, and the demand has been increasing for its business. However, the current fundamentals, because of its high valuation, however, this has a huge potential as we see huge demand for wagons and metro projects in India. Titagarh Rail is having a very strong technicals. We can see that from 5 years, 1 year, or from the time of its inception, and especially in the last 3 to 5 years time frame, it has been in an uptrend, very strong uptrend, and it is still continuing. And this has a potential to continue, because as we saw that the demand we have for wagons, especially from passenger and metro trains. BEML, earlier known as Bharat Earth Movers, a lot of us would not even relate this to railways, but this has focus on railway transport, construction, engineering, and especially has a lot of space in defense. So this is a very strong upcoming company. So from a market capital perspective, small to mid cap company, and its current price is quite high, both from current price as well as stock P perspective, and involved in, as I said, in defense, aerospace, mining, construction, and rail and metro areas. Having a huge customer base. This includes companies, especially the PSUs like HAL, BEL, Bharat Dynamics, Indian Army, the entire railways, ISRO, and the list goes on with many core sectors. They are all key customers for BEML, and this could be a dark horse from the overall railway pack from a growth perspective. From a technical perspective, I feel this has a very strong technical chart, and there has been a strong uptrend, especially last 1+ years. There is a strong breakout, and we can add this into the watch list. RailTel, specially created to provide network infrastructure deployment and also providing fiber cables to enable connectivity at railway stations and train operations across India. This could see a turnaround as the number of stations keep on increasing, and the infrastructure requirement for all stations has been exponentially growing in India, and this has decent fundamentals, and it has a small to mid-sized company, 5,000 plus crores of market capital, and the stock PE is average. Its returns are also been quite average. Again, this company has been focusing a lot of orders currently, and we can see further quarterly results when they report a lot of profit. This could go into our watch list, and the way the railway network is growing, this company also can grow. No strong patterns currently, and however it has to really prove from both technical and fundamental perspective. The last but not the least in the railway pack is Texmaco Rail and Engineering Limited, which has a focus in manufacturing and supplying railway wagons, coaches and various railway components. It also offers services like track laying and construction. This has average fundamentals. This is the smallest company from the overall 10 railway companies, and the current valuation is quite high, and the returns also have been quite average. From a technical point of view, because of its future potential, as it is a small company now, and this can become a mid-sized company, and there has been a strong volume breakout, and the technicals are quite strong. So to compare these companies, we have seen the order by market capital so far, and we also want to see the order by valuation like PE ratio. IRFC is in the top position, Ircon, RVNL and RITES following them, and definitely a lot of people interested knowing about IRCTC. I feel IRCTC can turn around, but however I'm quite surprised to see the current quarterly results also not being quite strong, though we can relate the past performance, especially last 3 years because of COVID lockdowns and other operational issues. But in the future, the way things are growing, it can also grow. And by ROE, IRCTC, as I mentioned in the past, it's a favorite stock for many. And second is RITES, and RVNL is again having good P ratio as well as good returns. Ircon is following that. From an overall summary perspective, railway sector has huge potential, as we have seen that it is growing multifold and consistently getting huge budget from government, and many Vande Bharat trains are expected, metro expansions are expected, and railway transportation is the cheapest in India compared to all other transportation, and it's going to grow not just in passenger but also freights, goods, because of connectivity and solid infrastructure. And from stock specific PE ratio wise, IRFC is being available at a cheaper rate. IRCTC has a potential to create value from ROE perspective, but we need to wait for its value, and currently it is very high in cost. Container Corp can be a turnaround because of privatization, and Ircon and RVNL are available cheaper after IRFC. BEML, Titagarh cannot be ignored. They could be a dark horse because of huge potential. And caution is almost all of them are either at 52-week high or closer, and all these can change based on government changes or government policies and also market trends. So always do SIP mode to invest. Do not go beyond 10% for one sector, or at least pick 2-3 out of the 10 and keep it for 10% of your portfolio. Always do your own analysis before taking any financial decision. Consult financial advisors. Thank you so much for watching. Please subscribe, share, like and comment.